You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borg. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon, welcome back. Today is Tuesday, 22nd day of March, 2022. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. If you've joined via our YouTube channel, we're glad to have you with us. youtube.com/CFRN. Not only do we broadcast live every day at 12 noon Eastern on our YouTube channel, we also archive each and every daily show. Currently, there are over 1,900 daily live broadcasts archived for your educational and viewing pleasure. The only drawback to joining via the YouTube channel is I don't monitor the question box there. I monitor the question box on our go-to platform. So, here's a simple set of instructions. If you go to our homepage at cfrn.net, on the right-hand side of the page, you'll see a great big microphone. Click that. Follow the instructions. You'll be registered in about 30 seconds. And that will give you one-click access to the show each and every day going forward. It also gives you access to the question box so that you can ask questions and be a part of the discussion. The way it works, right before the show starts each day at 12 noon Eastern, you'll get an email, and in the email there'll be a link. All you have to do to join the show and have access to the question box is just click that link. It really is that simple. Of course, there'll be days you're out of the office, away from the desktop, and the only way you can access this is through the YouTube channel, so thank you, YouTube. But for the days that you're in the office and at your desktop, by all means, use that link so that you can join the show and have access to the question box. So with that, let us open with a word of prayer as we do. Our scripture is Proverbs 13:20. Walk with the wise and become wise, for a companion of fools suffers harm. Now, some of you have heard of motivational speaker Jim Rohn, who famously said that we are the average of the 5 people we spend the most time with. Now, this relates to the law of averages, which is the theory that the result of any given situation will be the average of all outcomes. So, as an example, if you wanted to become a mechanic, would you be better served by hanging around with a group of plumbers, a group of electricians, or a group of mechanics? Now, it reaches much further and deeper than that. The 5 people that you spend the most time around, over time, and this is just human nature, you're going to start to pick up some of their mannerisms, some of their language, and so you should be very careful who you spend time with. The number one person you should be spending time with, of course, is Jesus. But in the physical and the natural here on planet Earth, think about who you spend the most time around, outside of your own family, inside of your own home. And then ask yourself, do these 5 people represent my goals in life? If your goal is to become someone who is successful in business or trading, then obviously you would want to hang around with people, associate with, have discussions with people who have already achieved and accomplished what you're trying to do. Join me in a word of prayer. Heavenly Father, we continue to pray for the people of Ukraine and Russia, the world at large. But God, today we praise you for the friendships you have formed in our lives. You did not create us to do life alone. It's not easy for us to get along with each other, to see everything eye to eye, or even to walk through the minefield of conflict and forgiveness. Even when we follow you faithfully and obediently in these regards, there are difficult doors to walk through and hard realities to face. Lord, I pray that we can choose to be the kind of friends we would like to have in this life. Christ-centered, forgiving, honest, loyal, compassionate, sensitive, loving, generous, understanding, sympathetic, merciful, successful, and present. Teach us, Lord, to be good listeners. Help us to see each other through your perspective. Guide us in every situation of conflict. Help us to navigate disagreement with grace and condition, gentleness, and understanding. Lord, let us have and be friends who reflect your glory, your goodness, your mercy, your compassion, your peace, your forgiveness, your love, and your light. And Father, thank you for sending your Son Jesus to live among us, sacrifice his life for us, and leave for us an example of how to live. In Jesus' name we pray. Amen. And amen. Okay, well, happy Tuesday. Hope it's a happy Tuesday for you, whoever you are, wherever you are. Let me give you the numbers from around the world. The cash markets, starting with the cash markets, or the indices as they're called here in the U.S. Currently the Dow is up 238 points. The NASDAQ is up 241 points. For the NQ, that's about 1 3/4%. The S&P 500 is up 45 points. That's a little over 1%. And the Russell 2000 is up 16.5 points, which is almost 1%. In the commodity basket, crude oil down $1.91, trading 110.21 last. That's a drop of 1 3/4%. Gold down $11.70, and silver down 42 cents, trading 24.89 last, and that's a drop for silver of a little over 1.5%. When the price of silver moves $1, if you're trading futures, that's worth $5,000 per contract traded. And we've got a 42-cent move to the downside today. So that's almost $2,500 per contract traded. In the Asian markets, at the close, the Nikkei posted a gain of 396 points. That's 1.5%. The Shanghai rose 6 points. The Hang Seng gained 667 points, which is a little over 3%. And in the European markets, at the close, the FTSE up 28 points, the DAX up 142 points, which is just over 1%, and the CAC posted a gain of 73 points, which is also a gain of over 1%. That gives us a green day in Asia. It was a green day for the UK. And so far, it's a big green radio turnaround Tuesday here in the US of A. So with that, we will go to Michael and get a recap on everything that happened this morning in the live training room. After that, I'll come back. We'll look at the Logic 247 alerts, the concierge trade alerts, and at any point during the discussion, if you have a question, all you got to do is type it into the question box, and we'll be more than happy to answer it for you. Michael, if you're ready, take it away. Okay, Michael's not quite ready. So we'll pop up a daily chart of the S&P 500 E-mini futures. Now back, a few weeks ago, we highlighted this area as potential resistance. And we can see that yesterday we finished the day with a little doji, and we hit that resistance area. We also drew this in a couple weeks ago, which would be the next area that we would expect the market to find resistance. And we said that in between those two areas was not a big, but a decent window of opportunity. Basically, 44.90 up to 45.04. So about 14 points. At $50 a point, not a bad day's work, but just as we ran into the resistance yesterday that we anticipated, here we are again today running into the same resistance that was created by the high of February 11th. Yesterday's high was based off the high that was created on February 16th. We need to overcome this obstacle here. And I'm going to take off the reverse fibs, and I'm going to start drawing fibs to the upside. I might wait for price to take the... Well, this is just above the 62% fib, so it's probably the day that we take this out, fill this window, and overcome this. That'll probably be the day I take off the reverse fibs and put the regular fibs on. Now, for those new to fibs, you typically draw from the low to the high, and it gives you areas where you can expect support as the market pulls back, because that's how markets work. Leg retrace, leg retrace, leg retrace. No matter which direction the market's moving in. Now, this daily chart, we had a leg and a retracement, and 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 a leg and a retracement that managed to break and hold above the daily BBC. That's the green line. Stands for bull-bear cross. When price is below it, we're bullish. We're bearish, and we anticipate lower prices. When price is above it, we're bullish, and we anticipate higher prices. Price always reverts to the mean, and in our case the mean is green, and we call it the BBC, bull bear cross. Price crosses above, price crosses below. Now, this is true not on just the S&P 500 E-mini futures daily chart. It's true on every market, on every time frame. And when I say every market, I don't just mean futures. I mean stocks. I mean Forex. I mean crypto, options, you name it. That's how markets work.
You know what else?
Price
What
flows the same across all markets and all time frames, from support to resistance, back to support, back to resistance, over and over again and again. And what we teach you in the live training room and the tools we provide you with help you know ahead of time where to anticipate that support and anticipate that resistance. And I'll get into that more as we go into the charts later in the show. But it sounds like Michael has arrived.
Hey, I am.
All rise.
Thank you. Thank you. All right, be seated. Yeah, the one other thing I was going to say, Dwayne, that I mean, you say from time to time is with regard to the BBC, if you're on like a daily or a 30-minute or whatever, if you're below the BBC, it's trying to get to the next zone below. If you're above the BBC, it's trying to get to the next zone above.
True
so
story.
About the whole support and resistance stuff.
True story. And
we've been into the weekly trading zones.
And we've been publishing those zones for our members since December 14th of 2009. Every Monday morning, they go out to our members at 6:15 a.m. Eastern. And now that it's been well over a decade, I guess we're like approaching 13 years, nothing's changed. The way price behaves around a weekly trading zone is the same today as it was the first day we publicly published the zones. Michael and I traded them for a while, but then we finally made them public to our members once we had sufficient time with them to know that it was a truth about trading. So, if you're ready, Michael, you can take it away.
Okay, I am. Here we go. Okay, you should be looking at my screens.
I got you locked and loaded. I'll hit mute. It's all yours.
All right. Good afternoon, everyone. Today is Tuesday, I believe, right? Tuesday, March 22nd, 2022. Now, if you've not taken a free trial with us and you want to, go here to eminitrainingschool.com. On this page, all that we ask for is your name, your email, and your phone number. You can tell us the biggest training challenge so we can tailor one-on-one training just for you. Hit that send button, you'll be sent a confirmation link. You must click on the confirmation link. Okay, if you don't click the link, we don't know that you took the free trial, so you gotta make sure you click on that link. All right, results. Results here. Now, if you're gonna read the spreadsheet, you gotta read all the CFTC risk disclosures down at the bottom. Today is the 22nd day of March, 2022. And today we made 60 ticks in crude, 42 ticks in gold, and 8 ticks on the ES. Put us at $1,120 per contract on the morning session. Today it took 4 minutes and 2 trades to get to the goal for the day. At that point, we're up $100 a contract, and we took a total of 19 trades this morning. So on the month now, we're at $25,360 a contract. That's over 16 trading days, averaging $1,585 per contract per 2-hour trading day. We've now gone 117 days since our last down day, and we have gotten our goal on every single day so far this year. 55 out of 55 possible days. And that puts us at $61,123 a contract, averaging $1,111 per contract per 2-hour trading day. If you were to quit when you got your goal for the day, right here, if you were to add one contract per month and quit when you got your goal for the day, you would have worked 8.4 hours so far this year, and you would be averaging $1,712 per contract per. I'm sorry, that's not true. Be averaging $1,712 per hour. It's not the per contract per 2-hour trading day. That's just per hour. This is per contract per 2 hour, and this is per contract per 2 hour, and this is per contract per 2 hour. This is. Anyway, let's get into the trades. All right. I'll start out with the ES because that's where we had the fewest trades this morning. It's not the one that gave the fewest, it's just the one that we took the fewest on. Okay, oops, that's yesterday. So let's go. This is today right here. Yes. Okay. So our first trade, it looks like on the ES was right here. We ended up with a break even. I was looking for it apparently to get up to this level right here. It did, pulled back off of it, and then I must have looked at something else and stopped looking at the ES. The next trade we took was over here on the ES, and it looks like we picked up. There's something missed in here because we went, this I think was a 13 tick trade. We went from 6 ticks to 19 ticks. I think we had a trade right in here where we picked up 6 that I didn't mark. And went to 19 ticks on that one, I believe. And we had another break even. And there were some trades through here, but just nothing that I highlighted. I must have been looking at other stuff. Going through, there wasn't a lot right through here, guys. You know, we're going back and forth around the weekly trading zone. They really didn't give up a lot of opportunity. So we really didn't miss all that much through there. Looks like there might have been one here. I was looking for it to get up to here. It took a little while to get there. Then I went through it. Then we came back over here. I want to go look at the higher time frame in just a second with you, okay? But before I do that, I just want to point out the highest probability trades that triggered. There's one right in here during the break. One right here that was going into the zone, so I wouldn't have done it. The slingshot was just barely right on that, but there was one right there, again, going into the zone, so I wouldn't have done it. And again, going into the zone, so I wouldn't have done it. So there weren't that many trades there on the ES today overall. That's why we only got 8 ticks. The next one I'll go to, we'll just start out over here with gold. But I did want to look at the larger time frame for a second here on the ES. Now this morning I was questioning whether it was going to get up to the zone here before it pulled back, but now it's doing the pullback. So now what I would think you should look for on the pullback would be right about here. Look for it to draw down to 44.82. 44.82. Okay, that's probably over the day today. We're down below this weekly trading zone right now, so it's probably going to pull back up to it and bounce off it. But I know 44.82 is not a big stretch. It's only right down here. But that's what I would think. Probably over the next hour, next half an hour. Maybe by the time I'm done talking, it'll be down there. Let me look at the DOM and see what the DOM's saying. Right now the DOM is mixed, so I'm thinking that it probably wants to pull back right here a little bit further. It's got a grouping right up here, right up above the BBC. 92, 93 right in here. It's probably going to pull back up in that area and then drop down and start to move. Probably get a little choppy in here for a little bit before it moves down to 82. But we'll see. All right, next trade, we'll go to gold. Gold just had a nice long trade right here. I'll point that out, but this is during the break, so I'm going to point at the highest probability trades. So there's one right here. The trades that we did in gold. Back here now. Hold on. Which one did we get our gold today? I believe. Oh, you know what? I totally messed that up on the ES. Sorry. Let me go back to the ES really quick. I totally messed that up. I was looking at the wrong one. Okay, so that first trade that we got, we didn't go to 19 ticks on the ES. We went to 8 ticks on the ES on that one trade that I showed. We went to 8 ticks. Sorry, I was looking at the wrong list. We had a break even there, then we went to 8 ticks right there. That's where we got our goal for the day, I believe. No, I got the goal for the day on crude oil. But we got 8 ticks right there. That was our one trade that we got 8 ticks on the ES. Okay, so I didn't totally mess it up. But we never got to 19 ticks on the ES. That part I did do wrong. Okay, let's go back here to the gold. All right. Now on gold, our first trade was here. Our next trade was 6 ticks on the gold. All right, we missed this right here. This is the highest probability trade. Bounce off the BBC. We missed that one. We missed a follow-up trade right there, a follow-up trade right there. We got the follow-up trade right here for 6 ticks. Turned around and dropped right here. We picked up 13 ticks to get us to 19. Then there was another trade right here and another trade right here. There's one right here, one right here, one right here. So we picked up 13 ticks on that. We were at 19 at that point. Then we had a small trade, highest probability trade right in there. let's see. We had a small trade right here. We picked up two ticks on. We got to 21. Then we had another small trade right here. We picked up 2 ticks on. They got us to 23. You see it went all the way up here. It came all the way back down. I only got 2 ticks. Then it got really choppy in here for a little bit. Didn't do any trading. We went from 23 up to 36. So we had another 13 tick trade, it looks like, right here. Then we followed that up with a break even and went from 36 to 42. 36 to 42. Somewhere in here we went from 36 to 42. And we ended with that. I don't know where that last trade was. This might have been the 6 tick trade in here. But anyway, we ended with 42 ticks this morning on the gold. Now during the break, let's see if there are any highest probability trades. It's just about one here, but that wasn't a valid trade right here. See, the cycle was wrong down here, but again, the lines are, the bars are real time. The lines they're off by 1 bar. They're delayed by a bar. There was 1 follow-up trade here and 1 follow-up trade here during the break. But we ended with plus 42 ticks on gold. Right, and now crude oil. Crude margins are huge right now. Did you know that? I didn't realize that. Well, I knew that they had gone to full margins, but they're full margins and a half, I think. Anyway, let me open up the question box and see if there are any questions. Brandon, the goal is to make $100 per contract. Okay. So the thing about the goal is to make your goal something that you can achieve every day. You got to treat this like a job. You're going to go there and you're going to make money. That's it. There's no question about it. You just got to go. You're going to sit down. You're going to get your goal, and then you're going to go away. That's the idea. Right? It's not to sit here and trade and make money and then give it back and make it and give it back and make it and give it back. That's not the idea. The idea is to sit down, make money, and then go do something else. So right here,
with that greater purpose being is to increase your account size so that you can add additional contracts.
Right.
And you use 1 contract to earn enough money to trade 2 contracts, and then you trade 2 contracts to earn enough money to trade 3 contracts, and pretty soon that 2 points in the S&P, which is $100 per contract, by the time you earn the right to trade 10 contracts, that's $1,000 a day. So anyway,
yeah,
just wanted to share that.
Okay, I'll go a little slower right now on the crude oil, right? Because we had most of the trades here on the crude. Yes, compounding. That's what in the spreadsheet at the end of it, this part here, that's what it's all about. 1 contract, 2 contracts, 3 contracts. That's why only 8.4 hours on the year so far. So you're still making the money. And it'd be up $14,385 if you followed this, working 8.4 hours this year, starting with 1 contract, then adding one more for February, 1 more for March. But if you started the year with 10, well, then it'd be a whole different thing. If you started the year with 10, I don't think I have anything that shows if I started with 10, where it would be. Well, I guess, yeah, this is it over here. If you add 1 contract per month, let's see, what is this showing? This is what the total was for the full 2 hours in the morning session. So that's not exactly right. If you added 1 contract per month and you did everything that I did in the morning session, right now, that's where you'd be. I don't even think that's right. I don't think that's accurate either. I gotta fix these numbers. These numbers down here are accurate. These numbers here are accurate. These numbers over here are accurate. But if you were to add 1 contract per month and quit when you got your goal for the day, that's where we want to get you. By the end of the year, like down here, you'll be trading 12 contracts. And if it takes you 5 minutes, 10 minutes, 20 minutes, an hour, that's all you have to do. And at the end of last year, if we go up here and you look at the end of last year, with 12 contracts on each one of these days at the end of the year last year, these are our daily totals These are our daily totals at the end of the year last year. So just multiply all that times 12. Okay, and that's what you would end up with. And I said, I don't know if you heard me this morning, but I said we have great volatility right now. When you have great volatility, you have better numbers. You have more opportunity. And that's what's happening right now. We have just great volatility, so we're having great numbers. So, if you started out the year with 10 contracts, right now, this would be today, would have been, instead of $1,120, it'd be $11,200. But you can do the math. All right, back to where I was. You want me to go slower in here? So right here was a break-even trade. Now, this wasn't the prettiest trade because of two reasons. The bars were the wrong color, okay, and the cycle started to move up. That's really why the bars were the wrong color, is because the cycle was the wrong color. Then the MA1 turned the wrong color, and that's what actually changed the bars. Now, it went like this is how it ended up, and that wasn't exactly a 45-degree angle. That's why I still took the trade, and I had to have a number down here that I saw for it to go to. Otherwise, I wouldn't have taken that trade. But I ended up with a break even on it anyway. And over here, this is more of what you want to see. Right here, it would have been a close on or above this trend line right here. Bullish separation. MA1 stayed the right color. The MA1 is the red and blue line right here. Stayed the right color. We had the up close right there on the trend line. So on that one right there, that's where we got our goal for the day. I picked up 10 ticks on that one. The next one over here, again, this was the wrong color and the cycle was going down. But when it was happening, I saw this number up here. So I went for it anyway, because I could see that number up there and I figured it was going to get up to that number. So I took the trade and I ended up getting 20 ticks out of it. Okay. And over here, same thing, all through here, it was going back and forth across the BBC and everything. Down here, the slingshot, it's either going to let you get in the trade or it's not going to let you get in the trade. This is going to tell you, it's going to be the first thing to let you know that a trade is coming up down here. The green line and the cycle. The cycle is the longest, slowest line on the chart. The green line is the fastest. The green line exaggerates price movement. So if you get a little bitty price movement, you're going to get a bigger movement in the green line. Okay, you see how this one little movement right here, we had this down close on this bar. It was just a down close. And that made the green line go from up here to right here. And then the next bar was an up close. And that made it go from right here to up here. And it was just an up close, half the size of the bar before, 2 ticks up. So that's what you're going to see down here first. All right, so up here, you might have noticed, I know you came in at the end of the session this morning, but tomorrow morning you'll see it. When I see all this stuff happening, I'm just going to tell you, I'm going to say the words out loud, and I'm going to do my best to draw it all for you and bring my DOM over and show it all to you. But I'll be saying something like, this bar right here, it's got a low right now, 109.73. It's going to have a high 109.75. If we get up close, 109.75 is going to be a long trade. That's what I'm going to say. And so when I say that, it's got 109.73, 109.77 would be the up close. When I say it's got an up close at 109.77, if you get an up close at 109.77, it's going to be a long trade. You put a buy stop on at 109.78. Okay. Buy stop at 109.78, 1 tick above where the bar is going to close. That's why I use range bars, because you know that ahead of time, so you can be proactive in getting into your trades. So you get into the trade, and then I would tell you a number, or I would teach you how to see the numbers that are coming up, and you can see where it should go to, and trail your stop and get out accordingly. Manage the trade. It's all part of it. I teach you how to get into the trade, teach you what to do once you're in the trade. And then you don't need me anymore. All right, but that's this trade here. The first trade we got 10 ticks on. The second trade we got 20 ticks on. The third trade we got 2 ticks on. Then the fourth trade we got 6 ticks on. I'm guessing this was a 2-tick trade right here. You see how it went all the way down here and came back up and got 2 ticks. This looks like another 2-tick trade right here. So one of those went from 32, one went from 30 to 32, one went from 32 to 38. This looks like a 10-tick trade. Then it went from 38 to 44. That's a 6-tick trade. So we had 2 6-tick trades. We ended up with 3 6-tick trades in a row, I thought. But we had a break-even trade over here. Now, with all this movement, what time is it? 10 o'clock. Just looking down here at the slingshot to see what kind of trades we had. We had good separation right here, but it wasn't giving us anything up here. Then it moved up, but it didn't give us anything on the top. You see how the slingshot's all messed up down here. The cycle is sideways in the middle. You don't want to trade like that. You want to wait until you get some good direction on the cycle, which is like right there. So we had a short right here. It went all the way down here and came back up. I think I got just a couple of ticks on that. But we went from 38 to 44 to 50, and then 50 to 60. So I don't know where the 50 to 60 was. I think there's stuff in here that I didn't account for. I knew I had more than I said. This was the highest probability trade right here off the BBC, all blue off the BBC. This was a high probability trade, not the highest. The one right before it right here was the highest, but it looks like I probably took that, but I got in a little lower down here. And I think I got 10 ticks on that to get me to 60. And then I got something right here that I didn't account for. And then we got all sideways. And then I think I stopped keeping track. We got all sideways and had a lot of movement. And then we took something here and we got profit on that. This was a close above the trend line and I was looking for it to get up to here. It eventually got up there. Then we had another one right here, but the slingshot wasn't right. I was looking for it to get up to there and it got up to there. The slingshot was just not letting you get into anything here. These were the numbers that I was seeing, but it just wasn't letting you get into anything. Then we got into the last half an hour and I didn't account for this. I think that was another 10 ticks there. But looking through here, and why did I stop keeping track? I don't know about that. But looking through here, the slingshot got all messed up in here, meaning it was up and down in the middle most of the time. And so you really don't want to trade when it's like that. And we finally got some pretty good movement down here. It was resetting all through here and not letting us trade. And then finally down here, we had one more shot at it. And it was right here. If I move this out of the way, you'll be able to see the trend line was right here like that. And I believe you saw me take that one, Brandon. And then I think I said where I thought it was going to go, and then it went even further. And yeah, you don't want to trade when it's in the middle. When it's in the middle, you just want to stay. It doesn't have to be above it or below it. You just don't want it to be flat like this in the middle or like this. You don't want to trade when it's like that. You want to have direction. Okay, it doesn't have to be above it or below it for the trade to trigger. It usually will be, but it doesn't have to be. Okay, like this right here, this is nice bullish separation. Over here, now this was during the break. If you look at the highest probability trade setups during the break, the ones where all the colors were right and you got to bounce off the BBC, this was the opposite. And this was the opposite color-wise, but trade-wise, set up in the slingshot, those were right. Okay, this right here, highest probability trade right there. Off the BBC, right color, good separation, everything's good. This right here, same thing. Off the BBC, highest probability trade, good separation, everything is good. Look at that trade. Let me see if there's another one. Almost right here on the long side. The color was wrong because the MA1 changed color on it, but it was almost there. This one right here on the long side was good. So if you just wait for those highest probability trades, if you just wait for them, you can do okay. But that's it. That is my recon of the morning session. Now let me go back here to the spreadsheet. Now the numbers are actually better than this, but for some reason I stopped keeping track on crude oil. Today, if you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. Today is the 22nd day of March, 2022. We made 60 ticks in crude, 42 ticks in gold, and 8 ticks on the ES. Put us up $1,120 on the morning session. Today, it took 4 minutes and 2 trades to get to the goal for the day. Again, Brandon, this is what I'm talking about. If you quit when you get your goal for the day, this is how many minutes each day I had to trade to get the goal for the day, and the number of trades it took, and where I was when I got the goal for the day. It's not always going to be 100 because the trade's got to close. So some of those days, I was in trades that just went a little wild and got a little extra. But if you kept trading with me all morning and you did everything exactly as I did, which is unlikely, you should do better than me actually, because you don't have the same distractions that I have. These are all the trades anyway, and it ended up so far this month at $25,360 a contract. That's over 16 trading days, averaging $1,585 per unit per day. That's 2 hours. We've gone 117 days since our last down day. Those are business days. And on the year, we've gone our goal for the day every day, 55 out of 55 possible days. And that puts us at $61,123. Again, that's per unit in 2 hours, averaging $1,111. If you were to quit when you got your goal for the day, you would have worked a total of 8.4 hours so far this year, averaging per hour $1,712 an hour. Okay, that is it. Now, if you come here, if you haven't taken a free trial and you want to, go here to eminitrainingschool.com, give us your first name, your email, and your phone number. You can tell us the biggest training challenge so we can tailor one-on-one training just for you. Hit the send button and you'll be sent a confirmation link. You must click on the confirmation link. If you don't click the link, we don't know that you took the free trial. So make sure you click the link. All right, and with that, I can pass it back out to fabulous Phoenix, Arizona in Studio A, overlooking South Mountain, America's largest city park. Dwayne, if you are ready. Okay.
Yes, I am. I was trying to let the street sweeper go by.
Okay. Yes.
He was kicking up some noise. And you already answered all these questions in the question box, right?
I did.
Okay.
Yes.
Very good. Okay, let me grab the screen.
Okay, and everybody that I have meetings with this afternoon, I'm going to send you links right now. Okay. And Brandon, if you want to meet with me, you got to let me know. I sent you an email.
All right. Recap of the recap.
Today, it took 4 minutes and 2 trades to get to $100 per contract.
Good job.
Thank you.
Now, there was a question earlier about the daily goal. Now, because the 2 hours every day in the live training room is to teach you our methodology, our strategy, how to read the indicators, the underlying principle upon which markets operates, the truth about trading. Once Michael reaches that goal for the day, he continues to trade in live markets in real time, because that's how you learn. If he just popped on every day, got his goal for the day, and called it a day, you wouldn't learn a lot. So he even after he's gotten his goal for the day, he continues to trade across multiple markets. And your job is to trade along in the simulator before you even think about going live. This is once you become a passport holder or a lifetime CFRN member. You trade along in your simulator in the beginning till you put together 10 consecutive days in a row where you reach your goal in 10 trades or less. That's when our 24/20 blueprint will give you the green light to go live with one contract. Once you go live, your goal is to increase your account balance by $2,000. Once you do that, the blueprint will give you the green light to add a second contract. The big difference between the first contract and the second contract is that the first contract is underwritten with your startup capital, but contract number 2 is underwritten with profit you earned in the market, as is contract number 3, number 4, number 5, number 10. The blueprint will always notify you when it's time to add an additional contract, but you only add one at a time, and you only add with profit you earned in the market. If you follow that, it makes it extremely difficult to blow up another account. Okay, well, that's it. We've already talked about the daily chart. We talked about where, weeks ago, we talked about where we expected to find resistance, and we found it yesterday. We had a little tiny doji on the day, compared to the size of some of these other daily candles. The default ATR, which is average true range, which means from the low of the day to the high of the day, based on the last 14 candles, is 105 points from the low of the day to the high of the day on the S&P. Over the last 100 days, it's 80 points. Okay, so from the difference between 100 days and 14 days is we still show increasing volatility. But somehow the volatility, it's hard to even say it, but it seems like the current volatility is a little more tame than, maybe it's just because there's a little more follow through with the volatility. Maybe that's what it is. But anyway, we ran into the resistance we've been waiting on yesterday based off the high of February 16th. And today we ran into the resistance we expected off the high of February 11th. So everything's playing out pretty much the way we anticipated. Right above us is the 62% reverse fib. If we can get above that 62% reverse fib and take out these highs, then we got a window of opportunity here. This is potential resistance because that's where the bearish cross happened that started this whole downtrend. So when price gets to this area, there's going to be some stiff, a high probability there's going to be some very strong resistance there. But once the market overcomes that and takes out this little double top here, then it's just a quick sprint up to the all-time historic intraday high. Again, these are reverse fibs where we draw from the high to the low. Once we overcome this 62% reverse fib, and really we got a triple top here, 1, 2, 3, then I will take away the reverse fibs and I will draw regular fibs from the, just on the last leg, which would be from this low to wherever the high is at that point. All right. So we've talked about the daily chart. I don't think there's anything else we need to say about that. So what we'll do is we'll take a quick look at the Logic 247 recap. We're in week 190. And I think we're 13, 14 trades away from hitting 10,000. That's 10,000 individual trend trade alerts over the last 190 weeks. Now, the Logic 247 channel opens for business Sunday night at 6 p.m. Eastern because that's when the global markets open. And once the channel opens for business Sunday night, it stays open around the clock until Friday afternoon at 5 p.m. Eastern when the global markets close. Now, we're in the Tuesday session, and it will remain the Tuesday session until 5 p.m. Eastern. Then there will be a 1-hour break. They got to sweep the floor, empty the ashtrays. And then at 6 p.m. Eastern tonight, that is when the Wednesday session begins. Okay? So this week, since Sunday night at 6 p.m. Eastern, we've issued a total of 30 alerts, 3 never triggered, still waiting on the outcome of 6. We've had 21 actionable alerts, of which 3 or 14% would have been stopped out based on not risking more than $300 per contract, per trade, less when possible, based on market structure and a very simple 3-step process that we teach all of our traders. Now, let's do this. If we can scroll up to Sunday night. Okay. Week 190. This is a long on the S&P. B stands for buy. T stands for initial target. The initial target is $100 per contract on all markets, with the exception of the NQ. The initial target is $200 because of the volatility that we know is the NASDAQ. It's one of its hallmarks. Okay. Then we had a long on the Dow that never triggered. That's what the Z's mean. That alert went to sleep. It's probably now since long triggered, but we only wait a couple days and then we designate it not triggered because we want to free up to be able to put out other alerts. Then we had a long on the Russell. The idea is to be long at 2088, initial target 2090, second target or potential resistance 2098, third target or potential resistance 2112, and then on every alert, the final trade to target is the weekly trading zone above on a long, and on a short it's the weekly zone below. On Sunday night, we're using the previous week's zones because the new zones come out Monday morning at 6:15 a.m. Eastern. So we had a long on the NQ. We had a long on crude oil. And then we had no trigger on gold, no trigger on silver. We had a long on the S&P. Stop out on the Dow, a stop out on the Russell, long on the NQ, long on crude oil, long on gold, and a short on gold, and then a long on gold. It's a beautiful thing about futures is you can trade in either direction based on what the chart in front of you tells you. Now that all happened Sunday night. Most traders don't even think about trading or Wall Street until Monday morning at 9:30 a.m. Eastern. But you just saw all that our traders accomplished Sunday night. Then we roll into Monday morning, long on the S&P, short on the Dow, long on the NQ, long on crude oil, stop out on gold, short on the S&P, short on the Russell, short on the NQ, which brings us to today, March 22nd. Got a long on the NQ, still waiting. We had a short on crude oil, and we're still waiting on the rest of these. Okay, the logic alerts are based on current price action, and they come out around the clock 24/7 as opportunity presents itself. We have traders around the globe, so our day session is their night session, and vice versa. Now, along with the logic alerts, which come out around the clock and are based on current price action, our original alert service, the concierge trade alerts. Oh, before I move this out, the last alert posted was 9,987. So we're 13 alerts away from hitting 10,000. And there's been books written about anytime you do anything 10,000 times or work 10,000 hours on a project or whatever. So we'll see. I don't think it's going to change. It's not going to change anything other than it'll be 10,001 and then 10,002 and then 10,003. Okay. So now we fill that window once, we're filling it again. That's typically what happens. Those of you that are regulars know what that means. Okay. Now, our original alert service, the concierge trade alerts, they're a little bit different. Number one, they're based on historic price action, not current price action. And they're delivered as a static report shortly after the Globex open each evening. Once posted, these numbers are good for the entire session. Now, you probably don't trade every one of the markets. We cover the same markets and logic as we do with the CTAs. But whatever markets you trade, you should make note of where price is at the time the report is published. Because from that point forward, if price starts trending up towards 44.75, that's bullish. Our strategy will look for opportunities to be long the market. That's where you'll use logic and everything you learn in the live training room to yourself find opportunities to be long the market. On the other hand, if price starts trending down towards 44.40, that's bearish. And so our strategy is going to look for opportunities to be short the market, which is where you'll use logic and everything you learn in the live training room to yourself find opportunities to be short the market. So grab your screenshot. Okay. All right. Couple of headlines worth mentioning. If you're an Apple person, you may have got hit with a temporary outage yesterday. Services including iMessage, App Store, Apple Music, and Maps experienced outages yesterday afternoon. Internal systems at its retail locations were also affected, according to reports by Bloomberg. The problem has since been fixed. President Joe Biden warns of evolving intelligence. That sentence almost seems like an oxymoron, and I won't say any more than that. I'll just reread it. President Joe Biden warned of evolving intelligence that Russia is exploring cyber attacks, and that's not funny. A statement issued by the president urged companies to harden your cyber defenses immediately, and I'm passing this along to you as an individual. You may have, along with your trading, you may have some other small business that you run, operate. Make sure that your IT infrastructure is as secure as you can possibly make it. The IT infrastructure for energy, finance, and transportation poses the biggest risks. Criminals are staging a devious new kind of kidnapping. Over the past few years, thousands of families have experienced the same bizarre nightmare. A phone call, a screaming child, a demand for ransom money, and a kidnapping that is ultimately revealed to be fake. Now, yeah, that's what I thought. The rest of the story, you'll have to Google it because it's behind a paywall. Okay, and I don't believe in paywalls. Another ex-Googler has come forward to allege racial discrimination at the tech giant. Just days after a lawsuit alleging racial bias was filed against the company, another former employee is alleging sexual harassment and racism at Google. Amazon's been fined $60,000 for willfully violating safety rules at a warehouse. The citation, the most serious workplace safety violation in the commerce giant's history, and its fourth in the past year, says Amazon's very high pace of work is injuring workers. Now we talked about this years ago when people at the warehouses in the UK were complaining that they were every move you make, and I know because my son worked at an Amazon warehouse, every move you make is monitored. And in the UK, people were complaining of having to carry bottles around to pee in because if they actually walked all the way across the warehouse to where the bathroom was to take a pee, they would get docked. So slow down, Amazon. The Amazon MGM merger signals we've talked about this. Amazon has bought MGM, Metro-Goldwyn-Mayer, the roaring lion we grew up with when we went to the movie theaters, which people won't be doing much of anymore, it looks like. The $8.5 billion deal highlights what one theater exec called one of the biggest concerns for exhibitors: fewer in-theater releases. Alumni from Google's DeepMind are raising millions for their own startups. 17 employees who started at DeepMind, which is Google's artificial intelligence lab, have left to launch their own ventures spanning everything from nonprofits to energy to cryptocurrencies. They are called the DeepMind Mafia. Elon Musk's Starlink satellites are helping Ukraine drones hit and destroy Russian tanks and trucks. The Times of London reported that Starlink's internet system ensures drone teams can work even if there's an internet or power outage. And if you've been thinking about getting an electric vehicle, Ford's F-150 Lightning is one of the longest range electric vehicles on the market. The U.S. government's official range rating for the EV just came in, with a range of 320 miles on a full charge. The truck exceeded even Ford's own expectations. And one last thing. Federal Reserve Chair Jerome Powell said yesterday that the central bank would speed up its interest rate hikes if necessary to bring down high inflation. Who with a brain thinks higher interest rates is going to bring down inflation? Apparently, I'm just a dumb old country boy and don't understand the world of high finance, I guess. Powell said, because inflation is at its highest pace in 40 years, there's an obvious need to move expeditiously to return the stance of monetary policy to a more neutral level, and then to move to more restrictive levels, if that is what is required to restore price stability. The Fed last week hiked rates for the first time since 2018, and the market went up with the promise of 6 more interest rate hikes this year. You see, you got so many youngsters on Wall Street that they're believing the bull the Fed is feeding them because they don't know any better. Some of them never seen a rate hike until last week. The Fed raised them a quarter point from near zero, where it has kept them since the start of the coronavirus pandemic, sent the economy into a recession. The Fed also signaled at the end of its 2-day meeting that it would raise rates 6 more times this year. So get ready. Get ready. All right, we've already looked at the daily chart of the S&P. Boom, we just filled the window again. Finished filling it again. Let's go to the 30-minute chart of the S&P. Okay. Now the vertical line on the chart separates today, Tuesday, from yesterday, Monday. These are the CTA numbers that I just showed you on that list and encouraged you to take a screenshot. The trigger was 44.75. The target was 44.95. That's 20 points, $50 a point, $1,000 per contract traded. From the published entry to the published target, $1,000 per contract traded. Now, only 3 things happen at a weekly trading zone. The most common thing is consolidation. This is what you're seeing right here. Okay. You're going to see that under normal conditions about 70-80% of the time. The second most likely thing to happen at a weekly trading zone is rejection. That's when a 30-minute candle comes down to touch the zone, but by the time the 30-minute candle closes, all that's left touching the zone is the wick. Price got rejected. Now, when price drops to a zone, we expect it to be good support until proven otherwise. Sometimes it'll overshoot it a little bit, but ultimately the zone held as support. When we rally up to a zone, we expect it to be resistance until proven otherwise. So we had a 2-candle consolidation. Now, if you go to a smaller time frame, you can really see the consolidation. And then we got a leg, and then we got a retracement back to the zone. And now we're about to make a run at the high of the day. And there's an alert out there. I forget the exact numbers, but it's in the channel. It's one of the ones we're waiting on. I think it's like 45.12, 45.13, something along those lines, up to the weekly zone at 45.28. There's an initial target and then the final target. Okay. Now, last night, here's where the market opened. This was the opening candle last night. We came down to the short CTA trigger. And the zone is actually 44.31/32. The low of this candle is 33. Zones are in areas, so we came within 1 point of touching the zone, and then price got rejected. So from 4,400 to 44.33, that's 7 points at $50 a point, $350 per contract traded. When the market finds support, it goes to look for resistance. When price rises to the BBC, we expect resistance until proven otherwise. And we got it. It gave us another trigger that took us down to 44.36. It's 4 points, $50 a point, $200 per contract traded. Then price got above the BBC. Red and falling turned to blue and climbing, which is very bullish. We got a leg. We got a retracement back to the BBC. The pullback holds on the 30-minute chart and higher more often than it doesn't. Okay. Remember this. It's very important. Pullback holds more often than it doesn't. It held here. It held here, 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 here. I could go on. All right. Now, because we're above the BBC and we're above the weekly trading zone, as Michael said, price is always trying to get to a zone. So it's obvious the zone it's trying to get to right now is 45.28/45.29. If price were below the BBC, like it was here and here, we know it's trying to get to the zone below. That's important information. Hang on to that if you're new. Okay, here's the Dow. Triggered on the short side, hit the target from 380 down. Well, the target was, the zone is 34,320/34,325. So 80 minus 25. I'm sure I could do that in my head, but I don't want to. It's 55 points at $5 a point, $275 per contract traded. And then we get this little trigger on the long side that really just goes nowhere. That's the truth about trading. About 45 bucks. Then we get a little pullback, and then we trigger again. Now, on a typical day, you'll see the CTA trigger multiple times. In fact, all alerts, logic and CTAs, under ordinary conditions, once triggered, there's a greater probability of it triggering multiple times than not triggering multiple times. In fact, once it triggers, you should expect it to trigger again. And it tried to trigger again here. 34,620 was the trigger, the swing low. 34,619. It got one tick below the trigger. That's an official trigger. So we got two triggers here. This first one from 620 ran up to 749. So we'll call that 120 times $5 a point. $600 per contract traded. And we got back below the trigger. Pull back to the BBC held. Off we go again. So far we made it up to 735. So that's 100 points, 105 points, $5 a point. $505. I'm just doing this off the top of my head. Where's price trying to go? It's trying to get to the zone overhead. How do we know this? Because price is above the BBC. Price is always trying to get to a zone. Right here last night when price got below the BBC, it was trying to get to the zone below. And it did, to the tick. And once it got above the BBC, it was trying to get to this zone, which it did. And because we got through that zone, now it's trying to get to this zone. Okay? Does it always do what it's trying to do? No, not always. Okay? Life's just not that simple. Let's go to the Russell. Okay. This is where we opened. We came down to the weekly trading zone. Now, this bullish cross, which led to an extended move, the first time price revisits that area, I just talked to you about this on the daily chart, we expect that to be good support, and it was. And it was. And it was. This time, buyers came in a little bit early, okay, because they didn't want to miss the run. We get above the BBC. We know price is trying to get to this zone, and it did. And this first little trigger was worth about 6. It wasn't even a point. 2074.6. Okay. So a non-starter. See how we consolidated at the zone? Okay. Now, you got a bearish cross right here. Resistance. Finally, it breaks through. We break through. The target is 2098. So from 2074 to 2098, that's 24 points at $5 a point. That's $1,020 per contract traded from the published entry to the high. We've come back down to the zone. When price drops to the zone, we expect it to be support. Just like when we move up to a zone, we expect resistance until proven otherwise. When price drops to a zone, we expect support until proven otherwise. So we've triggered again at 2074, and we've hit 2079 and change. So it's 5 points, $50 a point, $250 per contract traded. Now, blue and climbing is bullish. Red and falling, bearish. So price has an obstacle that it needs to overcome. If price can overcome this obstacle, then we have a nice shot at another run back up to the zone. But price may struggle a little bit here to get through the obstacle. Okay. So from the open down to the zone, up to the zone, consolidation, most likely thing you're going to see, and then a run to the zone, and then a pull back to the zone. Now price trying to run to the zone again. Same thing over and over. Those of you that are new, if you go to youtube.com/CFRN, scroll back a week, scroll back a month, scroll back a year, scroll back 2 years. You'll see Michael and I doing the exact same kind of recap, using the same words, the same indicators, the same principles, the same. We haven't changed a thing because if it's not broke, leave it alone. Our strategy is not designed to outsmart the market. Our strategy is not designed to beat the market. Our strategy is designed to help you understand what the market is trying to do, and then we just simply want to do the same thing. Because guess what? The market's always right. Now, as I said, we're approaching 10,000 alerts. On average, 20% of the alerts do get stopped out every week based on that $300 risk profile that I gave you. In the live training room, you're trading on a much faster time frame, the 4-tick range, and so risk is limited to 8 ticks per market per trade. Okay. The alerts are based off a 30-minute chart, and that's where we don't want to risk more than $300 per contract per trade, but hear me, less when possible, based on market structure, which is a 3-step process we teach all of our new passport holders. Okay. All right, NQ. All right, the NQ opened here. Try to get down to the zone. Didn't quite make it, but we did trigger 14,330. Put in a swing low at 94. So that's 36 points at $20 a point. $720 per contract traded is what the market made available. And then price got back above the trigger. And this time the swing low was 29 points. It was almost $600 per contract traded. Then price gets above the BBC. We get a nice leg. Why does price stop here? Look left. What was once resistance will continue to be resistance until proven otherwise. The same is true with support. And so, all of our traders who were long this trade knew to expect resistance at this area. Okay, it's just how markets work. And then price pull back to the BBC. I might have mentioned the pullback holds more often than it doesn't on the 30-minute chart and above. Okay. Now, this first trigger takes us up to 374. No, it takes us up to 489. It's $280 per contract traded. Price gets back below the trigger, and it goes from the published entry to the published target. So 590 minus 475, that's 115 points at $20 a point. It's $2,300 per contract traded in one 30-minute candle. We overshot the zone. We've now pulled back to the zone, which we expect to be good support, and so far it has been. But we got the 30-minute step line right here, which is potential resistance. So we may come back to the zone again. Okay. We could end up pulling all the way back to the BBC, but so far it looks like the zone wants to hold as support. So we'll see. The NQ, remember, it's very volatile. It's probably not the best market to cut your teeth on. But what a beautiful move. The high of the move was 684. That's almost 200 points, or yeah, it's about a $4,000 per contract move. But the published entry is here. The published target is here at the zone. On every long alert, the trade 2 target is the zone above. On every short, the final trade 2 target is the zone below. Crude oil. Here's where the market opened last night. We opened, we pulled right down to the zone, right there. Found support. That's what we expect. Off we go. We trigger at 111.80 up to 112.42. That's about $600 per contract traded. Then we get back below the trigger and we make a run up to 113.06. $1,200 per contract traded. It's a little more than that, but I did that without the calculator. And then on the short side, 107.60. Only had one trigger there. Now, you see how this turned right at the CTA and this turned right at this? That's not unusual at all. 107.60 down to 107.10. That's 50 ticks, $10 a tick, $500 per contract traded is what the market made available. Okay. All right. So that covers crude. Now you'll notice on the way up, the pullback held and the pullback held and the pullback held. Then once price got below the BBC, the pullback held. It's just weird saying pull up, but so I say pullback. The pullback held. For two reasons, the BBC and the weekly trading zone. Now this is a strong bullish candle. We'll see what happens if it stretches all the way to the zone. Now there's still 7 minutes left in this candle. Price could easily close below the BBC, and if it does, we'll still be looking for trades on the short side. If it closes above the BBC, if it can get above the zone, if it can take out that high, then we'll be staring at this long CTA again. Gold, no trigger on the long side. Here's where we opened last night, right at the zone. Made a drop, tried to get to the zone, didn't quite make it. Came back up, consolidated again. That's what you're going to see most of the time in a zone's consolidation. Once the market makes up its mind and closes below the BBC, it runs right down to the zone below. Continues, pulls back up to the zone, consolidates. The pull back to the BBC holds. It holds more often than it doesn't. And then we triggered on the short side, 1916. The zone is actually 1912/13. So that's 3 points, $100 a point, $300 per contract traded. Then we got back above the trigger and did another $300 per contract traded from the published entry to the published target. And depending upon what happens here, if the pullback holds, high probability we'll end up triggering again. Okay. Now, once you understand the methodology and the strategy, you don't have to wait for price to get to the trigger. I mean, our traders who understand the methodology and the strategy could have grabbed their points for the day here, or here, or here, or here. I mean, there's lots of meat on the bone before we even get to the trigger. Okay. All right, two more markets. Silver. No trigger on the long side. We open here. We run up to the zone. We run into the previous high. It holds. Sends us down. We get below the BBC. We drop to the weekly zone. We expect it to be support, and it was. Price consolidated for a number of hours. And then we drop to the trigger. Bounced. Traded through the trigger down to the trade 2 target. Now this first one, 24.96 was the trigger. It only dropped to 24.95. 2 pennies is $100. That's a $50 per contract move right there. This, on the other hand, is 13 points at $650 per contract traded. And it went further. And once you understand the methodology and the strategy, you might have just stayed in that beyond the published target. Okay, the more comfortable you get with the methodology and the strategy and how markets work and how price flows. And here's the 6E. I took the liberty of going ahead and calculating the moves because I can't do those in my head on the euro. We opened here, come down through the zone. We trigger, first trigger, 93.75. Second trigger, $350 per contract traded. And we get back up to the zone, we consolidate, then we make a run, and then we make a run at the zone above, but we don't quite get there because we get into all this choppy resistance that we had yesterday afternoon. But the move was worth $137.50 per contract traded. Now it looks like we're about, or we could be, the pullback, oh, I should mention the pullback held. But that's potential resistance, red and falling. So you want to make sure. In fact, I'd like to see it just go sideways a candle, so red and falling drops, so that you're confident you've gotten above red and falling when you hit the trigger, so that you're confident pulling the trigger. Okay? That brings us all the way back around the world to the daily chart. Now, to become a part of the CFRN family, it's pretty simple. We're like the Emini Mafia. Once you join the family, you're in for life. What I'm really trying to say is we don't have upsells. We don't have recurring fees. When you buy a passport, it's for life. And that gives you access to a live instructor in an interactive environment every trading day from 9:30 a.m. to 11:30 a.m. Eastern. 9 out of 10 new traders fail simply because they don't have anybody to teach them how to trade. If you wanted to become an airline pilot, would you just go out and buy a plane? If you wanted to become a plumber, would you just go buy a set of tools? If you wanted to be a brain surgeon, well, let's not even go there. No matter what career path you choose, you know you're going to have to hire somebody to teach you how to do it. Otherwise, you're going to electrocute yourself or blow yourself up or crash and burn real quick. But for some reason, when people look at a chart, a historic chart, and after the fact chart, it just looks so simple. Anybody can do that, right? Well, 9 out of 10 people can't. It's because they don't have a living, breathing instructor who works with them. Not only in the group environment for 2 hours every day, but as a passport holder, you have unlimited access to private one-on-one mentoring. You're not going to find this anywhere else. Google till your fingers bleed. 2 hours of live training every day in an interactive environment, plus unlimited. There's no data cap, right? Like, you know how your phone plan has unlimited text, talk, and data until you watch one YouTube video. You hit your data cap, and now you get slowed down to 3G speed. We got no data cap. Unlimited actually means unlimited because we're teaching you how to do what we do. And you should be able to learn everything you need in the 2 hours in the morning and the Thursday night members only workshop, which is 9 p.m. Eastern every Thursday night. But, you know, there'll be hitches and glitches, or you need some help with your charts, or you need, Michael to set something up for you, or you want, to learn about the three-step process because you've already mastered the mechanical model in the live training room. You're ready to enter the world of discretionary trading. And then I'll spend time with you. All you have to do is book the session. As a passport holder, you get everything a trader needs all under one roof at one low price. You never have to spend another dime on another shiny object because everything you need is right here. We teach you our methodology and strategy, which works not only with futures, but with stocks, forex, crypto, options, because the underlying principles of all those markets are identical. Most people won't tell you that. They've got this course to learn how to do this, and this course to teach you this, and then another course, and then there's weekends in Vegas where you spend $7,000 to learn nothing. You come home on Monday morning with that hollow, empty feeling. Don't feel like an idiot, okay? Many before you have been sucked into the vortex, okay? Stop the madness. This is a home for traders. This is a family of traders. If you're on the trial now, or if you've become a passport holder and you've not tied into our community on Telegram, you're missing a huge slice of the pie. You can talk to, meet with, chat with our traders who've gone through the same journey that you're about to embark on before you spend a dime. You won't find that anywhere I know of. In fact, most places do everything they can to keep you apart. Why? Well, you can figure it out. You're pretty smart. So the methodology we teach you works across all markets, not just futures markets, but all markets. Our indicator set works not just on E-minis, but stocks, forex, crypto, everything. As a passport holder, you receive the around-the-clock Logic 247 alerts, the concierge trade alerts, access to the members-only workshops on Thursday night. I already mentioned the live training room every morning for 2 hours, and much more. Everything a trader needs, one low price, and all you got to do is go here, eminifuturestrading.com. That's where you get your passport. As soon as you get your passport, Valerie swings into action and provides you with everything you need, all the logins and passwords and links and everything. Okay? If you have a question, if there's a hitch in the giddy up as you're purchasing your passport, call Valerie, 949-42-EMINI, or send an email to support@cfrn.net. Now, once you're into the Telegram channels, into the CFRN family, we have a number of different channels for different purposes, but you can have access, you can have support literally around the clock, because we have traders around the world and there's almost always somebody hanging out. Okay? You post a question, you can post it publicly or you can send it privately to me. I have Telegram on my phone, on my tablet, on my PC. If you ask a question and I'm not sleeping, you get an answer pretty quick. It might say I'm not at my desk right now. As soon as I'm at my desk, I'll show you. But where are you going to find that? I only know of one place. So let your journey begin. eminifuturestrading.com. All right, let's go to our good word for the day. Yesterday, we talked about not exaggerating. Now, I'm not going to talk about that again today, but people exaggerate a lot in bars. Get a few cocktails in them, and boy, can they tell some tall tales. Sadly, sometimes in church, you can see that kind of exaggeration. I'm just seeing your question here, William. Let me read it and answer it for you. The big move on the NQ, when there's a big candle, there could be considerable up and down movement within the candle, hence the need for stop loss positions. What one can reap out of what the market makes available depends upon how your position is structured. You teach how to look for situations where you don't have to risk more than $300. Could you please show examples of how such a structuring works itself out? I'm just learning and I'm doing better getting something out of these moves, but just a small fraction of what the market makes available. What is reasonable to anticipate on how much of what is made available can actually be gleaned? Well, on that NQ trade, if you entered at the published trigger and stayed in it until the published target, it's kind of that simple. I don't know what time frame you're using to execute on. If you're using a 4-tick range, if you're using a 610 tick, a 1597, a 4181. But the answer to your question is something that we teach our passport holders, of which you are one, I believe. So what you need to do is just book a one-on-one mentoring session. As a passport holder, you have unlimited access to one-on-one mentoring. So I'm not going to teach you the 3-step process in front of the whole world, but I'll be happy to teach it to you in a one-on-one session. And there's a link you go to on our website to book a session with me. And it's cfrn.net/personal- Valerie will send you the link. How about that? I don't want to give you the wrong link. But that's how you book a session with me. If you want to book a session with Michael, you call him. But your question's for me. So go to the link that Valerie's going to send you right there. She just did it. Thank you so much, Valerie. cfrn.net/emini-personal-mentoring. Pick a day, pick a time that works for your schedule. Then you and I will meet up in a one-on-one environment in the go-to meeting room. And I will do my very best to help you understand the 3-step process. I'm glad that you're doing good. I want you to be happy that you're doing good. Okay? If you're getting your goal each day. No, Brandon, we do not offer a monthly subscription. Valerie will be in touch with you. The passport is very affordable. You've already spent more than what the passport costs on all the shiny stuff out there on the internet. But Valerie handles all that. So give her a call, 949-42-EMINI. And you're very welcome. All right. Good word for the day. Where there is strife, sow seeds of peace. James 3:16. For where envying and strife is, there is confusion and every evil work. When a well-known pastor was asked by a skeptic, do you believe there is such a thing as a real devil? He smiled and replied, have you ever been to an annual church business meeting? Ha ha. Seriously, if you have been a church member for any length of time, You know that strife rears its ugly head in the family of God just like it does everywhere else. Paul and Barnabas, a brilliant ministry team, allowed their differences over John Mark to separate them to the point where they could no longer work together. Later, Paul changed his mind, but it wasn't something where it was possible to turn back time. He appealed to Euodia and Syntyche to please, because you belong to the Lord, settle your disagreement, and I ask you, my true partner, to help these two women, for they worked hard with me in telling others the good news. That's Philippians 4:2. Strife hinders our prayers, takes our focus off lost souls, and makes us ineffective in our ministry. And don't think you don't have a ministry. You do. God created you for a purpose, and that is your ministry. Being in ministry doesn't mean you stand up in a pulpit on Sunday morning. I mean, that's one aspect of ministry. But we're all created for a divine purpose. If you haven't found yours, talk to God. He's been trying to show you since you were old enough to understand. Maybe he needs to speak a little louder. Maybe he needs to show you. Talk to him. We must learn to respect each other's talents, perspectives, and positions instead of envying them. In other words, learn to disagree without being disagreeable. The Bible says, for where envy and self-seeking exist, confusion and every evil thing are there. But the wisdom that is from above is first pure, then peaceable, gentle, willing to yield, full of mercy and good fruits, without partiality and without hypocrisy. Now the fruit of righteousness is sown in peace by those who make peace. That's James 3:16 through 18. And Matthew 5:9 tells us that God blesses the peacemaker. So when strife arises in your church, or in your life, or in your business, make it your mission to sow seeds of peace. And that's our good word for the day. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with his mercy and with his grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.